Eurozone Mining, ticker symbol ESM on the Toronto Stock Exchange, is developing one of Europe's largest copper and gold projects, Rovina Valley in Romania. Now the project reached a critical milestone. We were able to reach Scott Moore, CEO of the company in Eastern Europe, and have him explain the news to us. Welcome, Scott.
Thank you for having me, Bjorn.
Scott, as it has been almost exactly a year since we last spoke, please remind our audience about Eurozone Mining's Rovina Valley project. What do you have there? What is the location, infrastructure, etc.?
Sure. Rovina Valley is our sole project. We're a single mining asset company. Our assets are located in Transylvania in northwestern Romania. We currently hold 3 porphyry deposits that cumulatively add up to about 7 million ounces of gold and 1.5 billion pounds of copper, or roughly 10 million ounces of gold equivalent. Being in Romania, first world jurisdiction, infrastructure is phenomenal: roads, power, rail, as you would expect from a Central European country.
Okay, great. Of course, the big news that came out just a couple of days ago is the DFS, Definite Feasibility Study for Rovina Valley. Please shortly explain the results.
Sure. We put out a bankable feasible or definitive feasibility study on the project on Monday of this week, on the 1st of March. We're outlining basically 146,000 ounces of gold production in the first 10 years. So that's gold equivalent. We'll do 132,000 gold equivalent ounces over the life of mine, which is now 17 years. And we continue to process about 20,000 tons a day. CapEx number just under $400 million, after-tax net present value of $360 million US, and a post-tax IRR of about 19%. So a very robust project, and those numbers are all done at $1,550 gold and $330 copper.
So yeah, I think I noticed that, and I thought these were pretty conservative price assumptions. Can you give us an idea what the numbers would amount to at today's metal prices?
Sure. At today's metal prices, copper and gold, we would look at an NPV almost double what we have in the current model. So about 660 million US dollars NPV, and an IRR of almost 27%. So definitely has high leverage to gold and copper pricing. And having brought in Rovina, which is more of a copper gold porphyry, our revenue split is now probably 60-40 gold to copper.
Okay. And you're going to be producing a copper concentrate with high gold in it.
Yeah, so effectively we are a copper company. We only produce a clean 22% copper concentrate as our only output from our processing plant. It just happens to be very high gold grade content for the first 10 years. And then we actually double the concentrate production. Gold grade drops down as we, kind of morph into more of a copper company in the back end of the mine.
Okay, very interesting. Well, of course, people are looking for copper to be in high demand when the economy picks up again, and also because of the boom in the electromobility sector, where electric cars use a lot more copper than combustion engine cars. So it's a good time to be in copper, and gold, of course, is always good to have.
Yes.
Let's circle back to the DFS, because there were some important changes in that compared to a PEA you did back in 2019, I think. Please explain why that is the case and what effect these changes have.
Yeah, the main change is bringing the second open pit into the feasibility study. So in the PEA, we only had contemplated processing Kolnik. In this feasibility study, we have now brought in the Rovina deposit into the Rovina Valley project. Maybe a bit confusing, but that takes our mine life up to about 17 years. We likely have another 2 years of stockpiles processing beyond that, so almost 19 years of production profile. We're still leaving the Chirisata underground deposit of 4 million ounces and 550 million pounds of copper as growth beyond what we have in the feasibility study. So a very robust project, and a definitive feasibility study is fully bid. quotations for mining fleets and processing plants. So the numbers are highly defensible going forward. So that's a nice clean difference between a preliminary economic assessment, which might be plus minus 30% to plus minus 10% on the feasibility study.
Yeah, sure. That's you have a much surer outlook of what is to come. And as we said, with the rising copper and or gold prices, the numbers will also improve again. Now, that's on the technical side, what you're doing on the project. On the other hand, there are some next steps that concern permitting. Can you tell us what are the next steps? What are the biggest hurdles for you until you get into production, if it works as planned in 2024?
Yeah, sure. And, the feasibility has been a key to that permitting. As here in Romania, we have to put the feasibility, the design plan for the feasibility has to be put in place in order to move into the next steps of the permitting, which is for us is the opportunity agreement. We'll have that signed this month here in Romania, one of the reasons why I'm here. And then we move into the next phase, which is submittal of our urbanization certificate for our rezoning plan. So all the documentation is ready to be filed on that basis. We'll file that in April, and we expect to have that certificate in hand in Q3 or Q4 of this year. On receipt of that certificate, we then are allowed to apply for our construction license. Here they call it the urbanization certificate for the project / EIA. You file your EIA, which is again has been developing over the last 4 years anyways, from the mining license through the POOs and finally into the EIA submittal. But you need that detailed engineering to be formed part of that EIA submittal, because again, what you receive is approval of the EIA, but then the issuance of a construction permit. So it's much more detailed required on exactly on how you're going to build the project, and the detailed engineering is key for that submittal. And we'll be doing that detailed engineering now that we've completed the feasibility study over the next 5-6 months.
Okay, sounds good. Of course, if you have all that in hand, there's still the hurdle of financing the project. As you said, the capex is estimated to be like just about $400 million, Canadian dollars or US dollars?
That's US dollars, yeah. So we're just $399, so we're just shy of 400. So that's, but you're right on. And certainly for how we approach it is, we continue to look and demonstrate that Romania is keen to support the project. To get over that permit pessimism that investors may have about Romania on other projects that have not gone forward. We continue to move forward on a large-scale project with strong benefits economically for our region and for the federal government. But we do certainly believe that the financing will likely be 60-40 debt to equity, 50-50 debt to equity. As an example, we've already had discussions with some of the typical project finance banks, primarily out of France. We're in the European Union, we're in Romania. It's easy to bring capital into the country, easy to bring capital out of the country. And we are also exploring the potential for tapping into Germany's untied loan program. If we were to sell our concentrate to Arubis, copper is a strategic element for the German government, and it lets you tap into German Development Bank financing for this project. So there's optionality to look at funding outside of the norm just because of the strategic value of the copper that we have in our project.
Very interesting. Well, we'll see how that goes. It's good to know. So we were talking about money for the project, but that's still a ways off. Let's talk about what kind of money Eurosun has in the bank. I think it did a financing to the tune of 20 million, or bought deal financing for 20 million with Sprott Capital Partners.
That's correct. Yep.
Last year.
Back in May. Yep.
How much of that is left, and how far will what is left take you in your process?
Yeah. So of course, spending was heavily during this 2020 on the basis of doing the bankable feasibility study. This is thousands of man hours and millions of dollars, but we have about $9 million left in the bank. The big heavy spending is completed with the Banco feasibility study. And that financing, we brought in some very significant shareholders into that funding. Ruffer from the UK, Franklin from California, Merck's ASA Gold Fund also from California, Ixios from Paris, APAC from Hong Kong. So a very international based new shareholder base that holds about 35% of the company, a very strong shareholder register now. So we're in good shape now for several quarters going forward. Again, we'll probably the main impetus for us is share price. We have about $25 million in warrants between 40 and 55 cents. So as we would expect and continue to demonstrate, and people understand how good a project it is technically, now that we have a feasibility study and continued permit success, that we can surface that value in the share price, and that'll bring additional capital into the company, primarily through the warrants.
Okay, well, something to look forward there. Very well. So that brings us to the final question. Can you sum up why now at this point in time would be a good good time for investors to take a closer look at the company?
Well, listen, we just put out the feasibility study. That's going to take time to disseminate. The actual report will come out in 6 weeks. Our share price is, tremendously low for what we have on the table. We're trading at 0.1 NPV value. This is not a resource-based company. It's actually a developer. We will be going into production. We're near-term production in terms of looking at 2024. I think this will start to attract a lot more attention now that we have that feasibility study, and there's a great opportunity to jump in and experience the de-risking events that will continue happening over the next 6 to 12 months.
Okay, thank you very much. Looking forward to see how it all goes, and also, of course, looking forward then to our next talk once the next milestones are reached. Thank you very much for taking the time.
Thank you for having me on.